Hey, John, how's it going today?
What's going on, Pete? Good to see you.
Good to see you. Today, we're going to jump right into it. We're actually going to review three trades. Two of them that I think were okay. The third one I think was much better. And I thought it would be really fun for everybody in the community to not only get perspective on the trades, but also the perspective from a options trade potential, setting up a new idea versus equities, and then rolling it all the way back to what that means from a position size context. So in other words, every trade's not the same. Some trades have better ideas than others, which means you be okay with putting a little bit more in the beginning of the trade, looking to get aggressive, obviously, as it moves in your favor, and aggressive is relative. And then we're also going to have a summary of the entire thing, and we'll put the summary of everything we're about to talk about in the description. This is probably, I want to sell this a little bit. This is probably one of the most exciting things for me as a trader. When I had my trading floor in New York City, I would actually make everybody stand up and basically pitch an idea. So it was kind of an advanced way of doing it because you weren't allowed to like kind of hide in the corner. And like, I wanted to see what your thought process was. You know, one of my biggest pet peeves was like somebody would say Apple with a question mark. And like, it would drive me bananas because I had no idea what that person was thinking, you know?
Yeah. And question mark. Well, so you're putting hard-earned capital to work and you have a question mark?
Exactly.
Like
exactly.
you have to have an edge, and you have to have a thesis, and you have to have a justification for putting money in harm's way. Otherwise, don't waste your time. And like you said so eloquently, like not every trade is deserving of your full capital commitment or of your full risk commitment. There are different levels of commitment when you get into a trade.
Which also kind of blows the doors off of win-loss ratio. That's such a big thing on YouTube right now, that if you recognize ideas that aren't necessarily the best of the ideas you have, but still valid, you can still put money into the trade, but not as heavy an allocation. And if a couple of those trades don't work out, you're not really getting hurt because you recognized the allocation should be different. So if everybody out there is like on the roof screaming about win-loss percentage, it's not about win-loss percentage. It's about concentration in the right ideas that follow through.
It's not even close, especially with options. So I go off the deep end with this topic because if you want me to, I could give you a 90% winning percentage. Okay. And because options is a probability game, we could do way out of the money options. We could do things that give you high probability of receiving the premium. And I could brag that my winning percentage is 80%. But guess what happens when you do something like that? With every type of guarantee comes a lot of risk. And, that 20%, the times you're wrong could basically wipe out your account. So the more you go along the probability winning percentage standpoint, the more risky it actually gets sometimes. And new traders don't understand that. They just see the numbers, or they'll see the YouTube gurus talk about, 80, 90%, blah, blah, blah. Those numbers are completely taken just by themselves. They're completely useless.
Yeah, they're out of context, completely out of context. So anyway, I'm glad we're on the same page about that because it drives me crazy. I'd much rather have a larger percentage gain than a larger winning percentage.
Yeah, absolutely. Because, you could be wrong more than half the time, but if you manage risk properly and you manage your sizing properly, you're going to make money. You'll be profitable in a scenario like that, as long as you manage the downside properly.
Exactly. So that kind of takes us into, this is actually from this morning's game plan. For those who don't know, I do a game plan meeting with the community every day, 8:30 to 9 o'clock every morning. And it's basically a review. It's my ideas, the hot stocks, the sectors, the rotation, all that kind of stuff. So I'm basically giving the research and explaining it. But more importantly, the members of the community get to post ideas for me to review. And then we have a discussion back and forth. So what we're about to take a look at, we've hidden the names, obviously. We are going to talk about a couple of ideas, the quality of the idea and context of the idea. So I'm going to start out first because I want to get right into it. One of the things I mentioned in the newsletter this morning, based on our research, is energy stocks are kind of coming off the mat, finding a bid, and they rallied strongly over about a 2-week period, paused a little bit, and now we're looking for entries. And same thing happened with basic materials. Basic materials was kind of nowhere to be found for about a week and a half. And now we're starting to see some ideas percolate, but they're not the best of the best ideas. And that was basically the point that we were getting across. And even within the context of looking at energy stocks to be a buyer of, there's still a quality of idea. There's some energy stocks that are just reversing, coming off the mat and looking at new trends, versus two energy stocks that we pointed out literally in the game plan that already have been rallying for a few weeks, if not for a few months. And those are the better ideas versus the ones that are just reversing. So there's a very difference in the quality of the idea from just can you find idea. That's the first two we're going to look at. Then the third one is going to be a trade that I believe, and John, you're seeing this for the first time, one of the members in the community is following to the letter how we build arguments. And it just was fantastic because he said, because of this and because of this and because of this and because of this, I like this idea. And based on all of that, here's how much risk I'm willing to take. It was such a good job that I thought it was really good to highlight.
Absolutely. The best way to, to build any trade is to build your thesis or your edge. What's your justification for getting in this trade in the first place versus the other 10,000 choices you have. And if you could, the more ideas that you can generate for getting into that trade that's valid, the more risk capital you should consider putting in, and the more you should look at how the trade performs over time as well. So it's really important to kind of build that edge.
Yep. And by the way, this is kind of like a tangential thing. A lot of traders like, I'm always the one getting stopped out, or my trades always seem like they don't explode in my direction quickly. That happens because of trade selection. That's not your luck. It's trade selection. The better ideas you find and the more pieces into that reasons for doing that, you tend to get better, quicker follow through based on the idea. Hey, it's Pete. John and I really want to thank you for being here today. You have all the choices in the world on YouTube right now to find out about stocks and options, but we want to continue to over deliver. And the only way we can do that is for you to let us know what you like. What kind of stocks and options training would you like for us to see on the channel? Best way for you to do that, give us a thumbs up. That tells us what we're doing is what you like. A little deeper, leave a comment. Let us know if you have any questions about what's on the video. If you want to take it even further and get personally coached by myself and John, click those links below in the description and see if coaching is right for you. Hope to see you soon. Thank you again. So you're actually losing less because you're picking better ideas, and you have less stress on the winners because they're working out quickly. It all has to do with having a structure to find good ideas and going that little bit extra mile. And there's a last one I want to talk. I'm so excited about this topic. The last one was somebody called out a crypto stock today that, in our opinion, was well beyond the optimal entry. But there's big news on crypto today with, they're crashing right now. There's all the reasons that it's going down right now. And this particular person did not do the last bit of diligence of saying, is there any news on this besides the technicals?
Yeah.
And that last part, we kind of talked about in the game plan. I kind of saved them, from putting the trade on, just going that one extra look, for whatever you want to call it.
Yeah, absolutely. When you have any type, you have to kind of look at putting a trade together as putting together a large puzzle. You know what I mean? And any type of headline risk or news, and which crypto is obviously a huge culprit in, right? There's always some kind of news going out, especially recently with the halving of Bitcoin and some government intervention. And, when the ETF came out a few months back, there's been a steady stream of either positive or negative news on this stuff. And you got to be aware when that stuff is likely to come out, and it could affect. It just basically either creates more buyers or creates more sellers, and that's really what the market is. It's buyers meeting sellers. So if it creates more buying or creates more selling, it's going to affect the price. So obviously the charts will reflect that, but you have to be very critical of what the probability is of that type of headline risk.
Yep. So he didn't even read the headline risk. That was the fun part of the conversation, because technically the trade made sense. It might have been a little bit late on the entry, but technically the way that he set it up made sense. But there was something else going on that he didn't do that last piece. So look, the extra mile is never crowded because most people don't do that little bit of extra work.
Yep, absolutely. Traders I know a lot of traders who tend to get caught in that. Like, they might be really good technical analysts, or they might be really good fundamental analysts, or they might be really versed in the economy and macroeconomics and stuff like that. And they don't put all three together. They only follow that one discipline. And it's really important as a trader specifically to put all that together and to form your best edge possible whenever you're going long or short.
Yep. Okay, so let's actually dive in this. We're going to start out with the first trade. I'll put it up on the screen first, the whole thing. So obviously energy, we spoke about energy. For those of you that might not know, the energy sector is one that we've been reviewing quite a bit. You can actually see started to rally, paused over here, and obviously this is today unfolding already. So let's take that out of the equation. We had the pre-market conversation because we don't have after the market opens. That's what we were looking at. So we're actually looking at a pause of a reversal. So the way I broke this down, John, I don't know, I'm pretty sure we look at things the same way. This is the first sign of a potential reversal, but not necessarily any money really committed. I mean, if you really even look at it, there's basically 2 green days here versus the last 3 months of selling.
Yeah, you have a long-term downtrend, and you have somewhat. Now, this is what I always say: you have what looks like to be the breaking of a long-term downtrend. That's the good news, right? The obviously price has stayed at those highs for like over a week now. If you look at that basing that's been going on, but here's the but: that does not mean it's in an uptrend yet. That does not mean that it's going to go blasting off to new highs. It just means that maybe the heavy selling is over and people are trying to figure out, some sort of what's going on next. And that could last a while. You might get some choppy for a while.
Yep. So let's put this from a perspective of position sizing now. So we just kind of qualified it's a few months of selling versus a couple of days of buying and a pause. For me personally, on the equity side, this would be something that I would have a lower initial position if I decided to do anything at all. And no harm, no foul, small piece looking for it. I like to have it in my position summary because I like to read the P&L being up or down for the strength of the stock as opposed to just looking at it in a chart or something along those lines. So if anything, it would be smaller position size. But then going back to the other part of the question is that the best idea I can find right now?
Yeah, so my take on that would be pretty much the same on the options side. I would look to probably, I'm thinking, there's a couple ways to handle this. What's great about options, you have a couple of different ways to handle this. If you are anticipating a move to the upside, but you just don't know when, you think it's going to maybe base for a little while like that, stay kind of sideways. One of the things you might want to do is do something a little longer dated. So one of the things I would look to do if I'm going to see a long-term downtrend broken and maybe a slow grind higher, I would maybe go out several months instead of just 1 month. So I would look to buy call options 3 months out, something like that. And if volatility is relatively high, which it isn't right now, but I would look to maybe sell some premium against it. But I would sell that premium on a weekly basis. This way I could adjust my strike prices accordingly. So there's a couple of different ways I would kind of hit it. I would kind of look to go further out to kind of allow my trade to work. When you do that with options, though, you have something called time decay, which is something stock traders don't have to worry about too much. So I would have to sell some premium against it to offset that theta decay.
Okay, so now that's just the set. We haven't even gotten into the trade yet. This is where it kind of gets really exciting because that was just the setup of why we were looking at these particular stocks in the first place. So now we're going to actually take it another step deeper and start to do the analysis on the actual ideas. So in this particular case, let me zoom this in just a little bit. Looks like energy wants to get going, like Exxon, COP, and TRGP. So I just want to qualify this. John, I think I mentioned this on last Saturday's call. TRGP is actually the one that I had called out. I said, if you're going to look at anything here, this one already has relative strength.
And that continued to move higher. This is always the case. Whenever you have a sector that looks like it's starting to show signs of an early trend break or an early stage uptrend, or you got to look for the highest quality, the relative strength. And that one was clearly one of the best ones in the batch because it was in an uptrend. It never had that long-term downtrend that XLE had. So you clearly have buying momentum for that name for whatever reason. We're not even talking about reading the news or anything like that. It just seems to be something where it's catching a lot of buying interest. That's going to continue as the sector gets more attention.
So we compared this now to TRGP. I think we also talked about LNG as having relative strength compared to the couple that we looked at. And John started to look at COP here. So we basically were kind of looking at this particular spot right here, which is almost identical to what we were just looking at the XLE. It's almost a mirror chart of what the XLE is doing.
Sure does.
So then we kind of qualified it. And I said, John, I could see your idea, but is that the best idea in that sector that you can find at this moment? So clearly we're talking about, again, from April through basically the end of June of selling, making a decision of, I want to invest in this sector and what is the best idea at the moment. And we compared COP from LNG or even TRGP. So the lesson that I want everybody to take out of this is that you can talk yourself into any idea, but how many pros and cons can you put into the equation to justify the likelihood of making money on risk? And that was really where it turned into a 20-minute conversation pre-market.
And I know what people think. They'll take a look at TRGP and they'll be like, wow, I think I might have missed it. You know, it's one of the, if you rewind 20 years ago in my trading career, I'm always the one thinking, you know, I'm trying to be the smartest guy in the room. I'm trying to pick the bottom or pick the top or whatever. But trend following, you know, following relative strength is really what gets you paid the most. And following something like TRGP, just because it's already high does not mean it's not going to go higher, especially if more money pours into the sector. And that's the possibility we're talking about right now.
So that was the first idea of COP, right? So he basically gave it, I like it the most because it's in the most defined box, which was the push down and kind of going sideways on the daily chart. Volume dropped each day during the pause. If it can get above 116, it can go. So that's actually a big lesson there as well. And one that we adhere to quite a bit, that, you know, when a stock kind of eventually goes into these boxes, that's kind of the right price. So until it gets out of that box, that is really all there is to do. There's really nothing new until it gets out of there. So I like the over 116, but I didn't necessarily like it as the best idea. That I'll give you the mic in just 1 second. Like, this is the part I liked it the most. That was the part that I really challenged him on today.
Yeah, because I agree with you. I think the whole idea of breaking out to 116, and this is another thing that a lot of new traders sometimes have trouble with, having to buy something at a more expensive price, right? But to me, it's confirmation that it's going in the right direction. As a trader, I care more about direction than price. And that's a concept that a lot of new traders have to kind of wrestle with because they got their investor hats on and they're thinking about, well, what if I buy something and I want to buy as cheap as possible? No, with trading, you want confirmation that it's actually going to break out past that level and move higher. So that 116 level looks pretty important to me. And I think that's great. But the idea of it being the best idea in the group, you know, one of the most important things I know we do every week is we go through our screeners and we try to find the best of the best. And sometimes, you know, maybe a name like that, it's a large cap company. So maybe the filters are set to just larger companies and that kind of thing. But you should challenge yourself to trade different things every week and not just make stuff up. Just try to find things that fit your criteria and not the other way around.
So one thing also that is always pretty important is looking at the overall sector and how long that sector has had attention, because we're looking to hop on board of institutional attention. We're not looking to create it or guess where it's going. It's so much easier to trade when you can say somebody's spending a lot of money there and I'm going to piggyback versus where they think it's going to be a month from now.
Right. Yeah.
So one of the things that we do every day is we have this spreadsheet that I put together for everybody at the end of every day. And you can actually see here basic materials, nothing to do. We're going to get into that in just a second. Energy is starting to perk up a little bit, but for the most part, over the last 6 to 8 weeks, as we just saw, it's only really the last couple of days. So you can make a case for energy and wanting to be looking at it, but as we're about to talk about with energy and copper, this is a different situation. So the second trade we're looking at right now, basic materials, specifically these guys right here, Southern, Freeport-McMoRan, and Alcoa, all of them interesting stocks that a lot of people like to trade in the basic materials sector. And in this case, he's saying with FCX as my favorite, it looks closer to an optimal entry than the other two. So we kind of dove into this a little bit as well from and you can obviously see here what I broke down here, is this the best idea? So obviously the sector we just broke down. So again, we're looking to ride the institutional order flow, looking to shadow that, not create something new. Can you look at the chart and say it's obvious somebody's is doing something here, and how long has it been obvious? So the way I drew this out, and I'm like, well, it's really in a trading range going back to April.
Yeah, it does. The only positive, you know, one of the positive things I see out of that chart is it's got pretty decent support. It made actually a higher low in the last couple of weeks. So that's encouraging, but it needs to break out of that range. You know what I mean? So as you can see, buyers stepped in a second time at higher levels. To me, that's telling me that institutions are stepping in, causing that reversal to happen. It was a pretty strong reversal, as you can see last time, the last couple of days. So that's encouraging. I would like to see what it looks like on a pullback to see if it could break through past that range. And keep in mind, again, going back to the fundamentals now, FCX is a copper miner. It's one of the largest copper miners in the world. Most of their mines, I believe, are in Indonesia. So they are very, very China-centric. So anything that goes on in China will have some sort of an effect on this particular stock. And if you're not a little bit well-versed in what this company is or where they're located, you wouldn't know that. You know what I mean? So always do a little bit of extra homework just to kind of know what you're dealing with once it does show up on your screeners. And in this case, you have to kind of wait for that pullback, I would say. It's kind of a little bit of a wait and see to see how it behaves and if it could break out past that range.
Yep. So I got two things here. Number one was I thought it was good that he spotted a stock that was in a sector that we now have our attention on. The stock is actually, you can see a bullish gap on Wednesday, a good strong opening today, but it's only a couple of days. Now, here's where it kind of gets more into the, am I buying at the right time? First, we can definitely see that it's been sideways for that bulk of period. You also have the solid argument that institutions stepped in and raised their bid here, right? They raised the limit order. They're like, okay, if I want stock, I got to step up and pay, which, by the way, is going to carry us perfectly into the next idea we're going to look at. The next thing is, what is the right entry? So right now, there's really no bias we're leaning on other than the last couple of days. So I want to know somebody spent some money before I lean on them to stick around because they made a commitment, right? So what we mapped out was basically, okay, I see the idea. I'd love to see this get up to this range where it keeps getting shoved down once, twice, bunch of times over here, which is basically 52.25, 52.50. I said, if we get one more day up and pause at that level, especially on lighter volume, then I would be more inclined to expect the next one to pop through there, kind of like what you just said.
Yeah. I mean, it's kind of a wait to see how the pullback looks, right? To see if it could continue to make those lower pivots, those higher pivots low. And that would be encouraging. But, like I said, I think it does have a lot of overhead resistance as well. So you could also argue that it could, it has to kind of remain at those higher levels. And another thing I would like to do, and this is something I do on the weekends when the markets are closed to have a little bit extra time. I'll pull up a stock that I see on my screener. You use FCX as an example, but I'll pull up XLB alongside of it, which is the basic materials ETF. So what I like to see is what you kind of did before with XLE. Like I want to see how does FCX look next to XLB, so I could see the relative strength going on within that particular name. So that's another thing I'll do, just to kind of compare apples to apples.
So timing on this one, just as much as order flow. So order flow, you can't look at it and say, man, buyers are in charge. If you do, you're saying basically the last couple of days. Other than that, no bias like we had over here, because we were actually looking at FCX and SCCO. Those were two of the bigger trades that we made a little bit early. And look at how clean that is. That's almost exactly what we're looking for. We're like, okay, that's the right price for a while. When it finally gets out of it, then we'll have something to do, which is kind of what we brought up in FCX here.
Yeah, it has the potential for sure. You just have to kind of see how it holds those higher levels for a little while. I know it takes a little bit of patience sometimes, but that's oftentimes, like I said, I'd rather pay a little bit more for something, knowing that it's going in the right direction, having more confirmation that it's going in the right direction.
Yep. And even just thinking these things through, because a big thing and something that is like a sore spot for me from my earlier career is I didn't understand to think things through this much. It was mostly, is it active right now? Is there news on it? I trade it without really thinking through, is it worth trading and whether or not it's the best idea? And when you start to see these things a little better, you start to minimize the trades or certainly reduce the trades that just at best have 1-to-1 risk reward ratio, and you avoid them. And then you go and look for better ideas.
Yeah, absolutely.
So go ahead. I'm sorry, John.
No, you have to map it out. You have to spend the extra couple of minutes, just doing that due diligence. It'll help prevent you from a lot of low quality ideas.
So the next one is actually pretty interesting because it brings all of the stuff we're talking about now into fruition. So in this case, looking at Charter, CHTR, and I know, John, you mentioned this on the Saturday game plan.
Yep.
So this is the one where I want to really make it clear to everybody, if you're not game planning like this or crafting out your idea, this is one you definitely want to take a screenshot of it and whatnot, because the whole point I want to get across is when you put in the time to really think through what you're planning on putting your money in harm's way. I love that quote, by the way. It should all lead to this reason, this reason, this reason, this reason means this much risk I'm okay with. You're building that argument for how much you want to put into the deal. And in this particular one, we'll just walk through it real quick. So reviewing the sector and giving the sector quote unquote rating, communication services, industry group, telecom have just been mediocre. So qualifying the bigger picture the last week and months. So this isn't a perfect setup. Now that's really important. Now we continue to build the argument. Moving averages are in the correct order with stacked bullish order flow on the daily, weekly, and monthly charts. More to the reason to look at it. Coming off of an inside day and working on an inside candle on the weekly also. So you have two different time frames consolidating into inside candles, the daily and the weekly, which sets up an entry. Just sitting above resistance at 302 with room to go up to 382. So now we're qualifying potential reward on the trade as we build out if it follows through. Now, this is a big part of it here. If it follows through, everything we're doing is building the argument for the trade, and even the best ideas might not follow through, but now we're deciding if it's worth betting if it will follow through. That's the whole thing. Now, this is really the part that got me the most excited. Since it's not a perfect idea with sector and industry group not doing great right now, I'll start with half of a normal position and we'll add as it follows through. So, John, there's a lot to unpack there because I know you have your top-down analysis and whatnot, and that's kind of what he just did right there. Yep. But I really want to stress this point, ending up with that's what it means for the risk I'm willing to accept. What do you think about that? And you can actually see how it's mapped out here. I just want to point one thing, and you could take it over from there, something you said before. You can clearly see institutions raising the bid and bringing it to this point where we're sitting on this potential breakout with all of this room to go.
Yeah. I mean, it's a great setup in the sense that you see multiple times where bids had to be raised. And when you start looking at a chart from an institutional perspective, instead of just kind of like a bunch of lines on a piece of paper, it really ups your game a little bit. What you're really doing is you're looking to see what story the stock is trying to tell you. And what that's trying to tell me is that there was obviously some news when it kind of flushed out that one big green candle day on its lows. That looks like capitulation to me. And then after that, you saw gradual people come in starting to buy. Now, the communication sector has been, over the last year, has been one of the better sectors. Recently, that particular group has not held up well, like the person mentioned. But there is that potential for it to run if money starts pouring back into the group. The overall sector has outperformed substantially compared to the rest of the market. Again, what I'll do, one of the things we do in our top-down analysis is we'll do sector analysis first. So I'll look at XLC alongside of SPY and see, well, is it doing better than the broad market? Is XLC, which is the communication sector, is that doing better than the stock market? You know what I mean? And so that's one of the things I try to do. Now, right now, that looks pretty much in line. But when you take a look at when SPY pulled back a couple of months ago, you'll see that XLC didn't pull back as hard. You know what I mean? Back, I think it was during when Iran and Israel were going through their missile exchange a couple months back, right? So XLC held up pretty well. So right there, it tells you that the sector's is favorable, and Charter has room to run. It's just a matter of, okay, well, it does have to get through a little bit of overhead resistance, but the institutional buyers stepping in at lower levels is really what attracted me to that name, and that's why I kind of shouted it out last week or the week before. I kind of had my eye on it. And the upside is obviously there too. You can see that the upside is fairly substantial. So from a risk reward standpoint, you could put a little bit of risk on because it's a little bit early. So like I agree with the fact that let's put on half a risk position and see what happens. And then let's just see if the momentum builds to the upside. So you don't have to put your whole size in all at once, either on the option side or the stock side. You could put half a position on and see if the edge continues. And then, from an exit category, you could have a hard stop, obviously, with a stock or with an option, or you can say, well, has the edge disappeared? That's another exit criteria for me too. So even before my hard stop, if the whole communication sector, let's say, was to roll over, or let's say the entire market was to have a little bit of a deep correction, I might take the trade off early for a small loss and then consider re-entry at a point later in time when the market kind of starts to move back higher again.
We do this. I do the same thing on the equity side, where is the idea still valid versus did I just get stopped out? There's two totally different things. The idea can still be valid. Maybe just get wicked out on one candle or whatnot. It's kind of an advanced thing, but I won't necessarily get out of the whole thing if I still like the idea. If I have 1,000 shares, sometimes I'll get out of 700, still have it in my position summary, and look to trade around that and work my way back into the position again.
And you could do the same thing with options. You could start off with half a position. If things look a little bit shaky, you could take half of that off and leave a quarter position on, and kind of just have exposure, and then see if you could trade around it, like you said.
So the last one we kind of touched on at the beginning, which was somebody looking to put on a trade in IREN, and obviously being affected by the crypto stuff that's going on. And the issue that we had this morning was the stock had already rallied like this over the period of the last 4 or 5 days. And putting on a new trade today was kind of chasing the entry a little bit, because really where would you be putting a realistic stop if the stock just recently rallied, in this case, $4, which doesn't sound like a lot, but it's actually a pretty good percentage. That's a 25% rally for the stock in just a couple of days. So with the bigger picture news in crypto that's going on right now, it was really important to understand what else was going on besides the technicals in that stock. So without really kind of harboring down on this point, it's really just a heads up to everybody to make sure that, especially if you're only doing technical analysis, which I know, you kind of mentioned it before, John, there's technical analysis, there's fundamental analysis, there's macroeconomic, like you work your way up away from just looking at the charts. You're using the bare minimum information just by looking at the price chart. It's valuable information, but even if you're not going to get into the fundamentals or get into the macro, which is perfectly okay, you still need to say, is there anything else going on in the sector, the group, or to the stock that might influence what you're seeing on the technicals? And it's a good reminder to make sure that's the last thing you do.
Yeah, very important. I mean, I think that you don't have to be an expert in fundamental analysis. You don't have to be an economics whiz, but just being aware of all the pictures and being aware of everything that's going on is really what gives you the edge. And obviously, technicals are probably the most important from a trading standpoint, because all the available information will be reflective on the stock chart. But if there's an event coming up, like earnings or any kind of news, or like the Bitcoin halving is a great example, everyone kind of anticipates some sort of movement around that time. These are things you just have to be aware of, because we don't live in a bubble, unfortunately. We have to be aware of where we are and what's happening around you.
Yeah, we spend a lot of time talking about all the information up to the point you're making the trade. But now after you're in the trade, you have new information. And now you have to interpret new information. You have to analyze and make decisions on new information. And I think a lot of people that get frustrated stop making decisions after they put the trade on without realizing there's new stuff happening.
Right. And that's where the edge comes in. You have to be aware of what was my thesis, what's my justification for getting into the trade in the first place. If any of the reasons why you decided to get in that trade was to change, you have to factor that in. You have to factor that new information in and decide, do I want to reduce? Do I want to add? Do I want to just close out early and maybe jump back in later? These are things in real time that you have to make decisions on.
Yep. So what I'm going to do, John, I think that was kind of fun, actually, going at it from stock and options perspective. I'm going to I consider this one of the most important game plan sessions that I happened to do this morning. I thought it was really fun to bring this into today's Stocks and Options podcast. What I'm going to do is I'm going to put the summary of that video in the description below this video, so everybody can copy and paste that, because there was a dozen lessons that came out of that video. But I just want to give one synopsis that I think is the most important, two, actually. Number one, there's a difference between, is this an idea versus is this your best idea? Challenge yourself to ask that question. And number two, remember, when you build out all those pros and cons for a trade idea, all of that should be leading to, and what does that mean for the right risk for this trade?
Yep. The last one of the last decisions you have to make before you pull the trigger is sizing. And a lot of people forget that part of it. That's a huge part of the decision-making process and the potential to be profitable and risk management as well.
Yep. So the one thing we didn't talk about today was the economic data that came out today.
Yep. Bad news was good news.
I quoted you today. I gave you full attribution. I said, no matter what's going on right now, all the news is being interpreted as good news. We're getting the oatmeal economic data where there's no shock on either side. It's just slightly around that number. The market's seeing everything as good right now. Ride the wave. Kind of get, don't think too much through it. At some point, that when good news becomes bad news, then we'll sit up in our seat a little bit right now. But as of this moment, again, with all the information we have up until this point, the market's at all-time highs again.
Yeah, you have unemployment ticking up a little bit more than expected. Payrolls, I think, were a little bit mixed because I think non-farm was a little bit higher than expected. And on top of that, hourly wages kind of went down a little bit. So a little bit of a mixed bag there. So I think just this whole idea of the economy is just doing okay with slightly higher unemployment is making the Fed happy. They'll never say it on television, but it makes them happy because now they're giving justification for a lower interest rate environment. That's it.
Yep. So all news is good news at the moment. Don't overthink it. We're going up right now. And until that changes, that's the right play. Don't get cute. Don't try and pick a top. Stick with what's obvious right now and just find a spot to move in that direction.
Absolutely. Or enjoy the summer.
Any words of wisdom to part for the weekend, John?
Words of wisdom. I think, obviously going into the summer months, we have earnings around the corner. So just if you're trading options, especially, just watch your earnings dates. Earningswhisper.com, right? Go on there and kind of plug in the ticker. Know when your earnings are. That's the words of wisdom for the next couple of weeks. Because the worst thing you could have is being a profitable trade, forget when earnings are coming out, and be like, "Oops! Now the whole thing's down 10%, and you lost everything." So I don't want to see that happen to anybody. It's just a matter of adding that extra step to your process.
Yep. A week from today, financials kick off.
Yep. So just be careful of that and enjoy the summer.
Yep. Sounds good. All right, John. Thank you so much. Have a great day.
Have a great day. Good talking to you, Pete.
Bye-bye.
Bye-bye.